Hello, I'm Doug Mackenzie and welcome to the Fintech Show. Now, this is a special spin-off series called How to Build a Bank, and it's being sponsored by our friends over at Mambu. We're going to be speaking with various different guests, inspirational speakers from around the world, bring them here either into our studio or catch up with them around the world to find out how they would build a bank. Now, we're splitting it into multiple different columns of the really important pillars of how you would build a bank. Now, in today's episode of How to Build a Bank, we're going to be looking at a brand new banking product that has really taken society by storm. It's Buy Now, Pay Later, or BNPL, and joining us here today we have Tilta, AWS, and of course Mambu. And they're going to be showing us how brand new banking products are going to change retail banking forever. How can offering a Buy Now, Pay Later platform or product improve the revenues for large-scale traditional banks?
Yeah, I mean, I think the consulting firms we're talking to, and they fit into different brackets. So you've got the traditional advisory firms, the strategy houses who are giving kind of pure advice, and you've then got the large systems integrators and management consulting firms who are looking to do and generate revenues on the back of some of those change programs. And then you've got the tech firms. And they're all offering the banks advice about what they need to be doing to effectively keep up with the fintechs that have disrupted the market and are now producing products and services that really the banks are being left behind from. So Buy Now Pay Later clearly is a revenue stream that is taking money away from traditional banks, and we're seeing huge growth in that area. The market's saying it's going to be worth 680 billion by 2025. There are some very interesting stats now about the sorts of people who are adopting Buy Now Pay Later as a solution. I have two sort of young adult children. They're now adopting it. They're looking at Apple, who are launching a Buy Now Pay Later service on iOS 16. So all sorts of providers are coming into the market, and the banks are going to need to move quickly and with new products if they actually want to catch up with the fintechs who are disintermediating them.
Every time you innovate, people have doubts, like big doubts until you prove them wrong on what you like to do. But what I like about this Buy Now, Pay Later, I think that's why B2B institutions are coming into it as well, is there was, I forgot the name of the survey, but there was this article that says, how can we teach retail to be thinking like a bank?
Yeah.
Right? Because this is the discipline that if you owe something in a bank, you have a schedule of payments. Mm-hmm. However, that schedule of payments before, you cannot really track it, right? You cannot really impose to the customer, or you have to pay it. So there's an amount of back-end collections happening. And every P&L, right, when you have losses, it goes directly to the bottom line of a particular financial institution. What Buy Now, Pay Later did was, we do it on a direct debit, right? It sends you a reminder that you have to pay, and it's 0% within 3 months. You're not spreading your risk very long. You're concentrating it on a very short period of time. So the amount of also income that comes in, it increases sales exponentially, so that attracts it. So if you have you have the right balance of risk and rewards, that's what financial institutions and business would go for.
That's amazing. It's a win-win for both the retailer but also the banks, right?
And the gravy to it is you're attracting new customers.
Yeah.
Because most customers right now, to be honest, if you have a payments, let's say unit in your particular business, in every business, right? You have it in every industry. You would think about it attracts new customers because we have a habit that we decide something we love before we go to checkout. Mm-hmm. Or we put it in the basket, we leave it there, and we come back, press checkout. That's the time we've decided to buy. Because that's what you don't get in a physical store, right? You cannot put it in your basket, go out, and come back in the store. The alarms would beep, right? So that's the beauty of it.
Now, how could BNPL be utilized by businesses during the current financial crisis?
So specifically, the current situation is very interesting in the context of our solution. Businesses will run low on liquidity, right? Interest rates are rising, and they're looking for alternative forms of providing or receiving working capital. And actually what happens first before going to financial instruments, if you will, or financial products, they push working capital up their supply chain, right? So you purchase something from someone, but you start paying them late, which means that someone then again receives their funds late, and they do the same towards their suppliers, right?
Yeah.
And then basically alongside the power of the supply chain, the working capital problem is basically just push down the supply chain. And you can always improve working capital, creating a benefit for yourself, but only at the expense of someone else then, right? So you're shifting the problem basically along the supply chain, sometimes forward, sometimes backward. That really depends on the power distribution in each business supply chain. But with a third party entering a transaction, you can take this away and basically have both parties not be faced with the trade-off, but actually benefit and improve their working capital because the financing and the risk was taken over by a third party. This is the need for this is particularly pushed or driven in times like these.
There's not a lot that we're seeing, but the biggest one really is it's not more on the customer journey. There will always be, right? But at how you process the payments at the back.
Yeah.
It's at the back end. Because one is, how do you protect your consumer from fraud and how you detect it at the same time, in real time? And how do you mitigate cyber risk at the end of the day, right? And how do you now, when that happens, how do you now work with regulators to combat that at the end of the day? So I think the differentiator there really is, again, putting your customer at the center of it, and how do you protect that consumer? Because fraud happens every day. I mean, not in Europe, right? For example, in our neighbors in across the Atlantic, identity theft is quite prevalent.
Right.
Right? So for us is, how do you now, if you take a look at when you access a website, you have now the power to control your data. You have to accept or decline. Do you know that every time you accept, right, you go to a particular shop, every time you accept, you go to your social media, you would see ads pertaining to your search. You would notice that. Or even in your email, you know, whether you're in Gmail or in Yahoo or whatever emails you have right now, not your company email, you would see ads coming in and you'll be surprised. It's because of you, you're sharing your data.
Yeah.
So take a look at how you share that data. So those are differentiators really. And I think second is, how do you now make sure that nobody defaults?
Yes.
Right? So because I used to work with unsecured collections before, it's really painful to collect from something that's not a secured credit, right? So there's a certain risk and reward there for institutions. The differentiator is, how would you now marry that, you know, to protect that the institution and then to protect your customers?
Yeah, I completely agree with you. I think especially now with the current climate, people are being more aware of their finances.
Yes.
And if you can be seen as a paragon of protecting your customers as a financial institution, even if you're a brand new fintech bank that was started a week ago, if you have those checks and balances, people will feel comfortable.
It just dawned on me, you're asking for a differentiator. What if, for example, instead of going to a website or going to you have a QR code that you can just scan?
Yeah.
Right?
Incredible.
So from the QR code, I've seen this right now that you can just scan my phone and get my number. So can you, getting rid of business card, you just scan a QR, this is my QR code, scan it, all my information's there. And then you need to buy. So it's really a cashless society at this point.
I mean, that'd be incredible.
So that could be a good, it just dawned on me. So everybody who's listening in right now, if you have that technology, that could be something that you can test.
If you could give the traditional institutions your advice to how to build a bank in this new day and age with new financial products, what would be the key ingredients?
I think agility. So speed of decision, you know, fail fast if you try it and fail fast, rather than waiting for perfection. You know, the whole point of agile is you try things, you iterate, you do proofs of concept, you see if they work, and if they don't work, you then move and pivot to something else. versus the old waterfall method, which was requirements gathering 6 to 12 months to actually implement something, by which time the market's changed. We know how dynamic the market is. So, kind of move with the market, move fast, try stuff, and if it doesn't work, then try something else.
What sets Mambu apart? Why are you guys the best at it?
Yeah, I think when you look at our competitors, they've all got very different approaches. They've got different investors, they've got different responsibilities to those investors. But we believe that Mambu is the only true composable ecosystem-based solution, which allows our clients and our customers the greatest flexibility in pulling together the right solution for them. We work with systems integrators and consultancies who build those ecosystems around Mambu, who can swap components in and out. Think of it as Lego bricks. You can build what you like with Lego bricks. Our competitors are probably more like a jigsaw, that ultimately there's still only a finite picture you can build, and you have to put the slots in the right place. So it's about flexibility. We're also true SaaS. We're the only kind of true SaaS provider out there, which means that when we make a change to our product for one client, it's for all of 250 plus of our clients. They all get the benefits from that.
That's all we've got time for on today's episode. I hope you've enjoyed it. You can catch the rest of the series and much more over at ffnews.com. Thank you very much, and goodbye.